Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, China is taking the US to the WTO over its tariff actions, a move that is unlikely to see an early resumption of direct trade talks. Firstly, however, it's a holiday in the US, so Wall Street is closed. European markets were generally quiet, although London rose 1%. They followed Asian markets, which closed yesterday generally lower by about 0.4%. But Shanghai had a banner day, up 1.3%. In China, the unofficial Caixin factory PMI shows a small expansion in the sector. This wasn't expected, especially after the official measure of large-scale businesses, many of them state-owned, showed a contraction. The Caixin survey is of medium-sized companies and suggests that these firms are adapting better to the tariff stresses. And there's more evidence China is ignoring the pressure from the US. Although it didn't retaliate directly to the latest American hike, it has taken the US to the WTO with a complaint that has a very good chance of success and a move that is likely to rattle the Americans. In Hong Kong, tens of thousands of Hong Kong university and school students swapped classes for democracy demonstrations yesterday, the latest act of defiance in the anti-government movement. In Japan, their factory PMI is in contraction, but only just. One issue getting the blame is that Japanese are just too organised. Most of the stimulus projects for the 2020 Olympic Games are complete, or nearly so. In the UK, political uncertainty is rising with the chances of a snap election high if Parliament blocks a hard Brexit. Ratings agency Fitch is pointing out that the annual GDP growth rates have been falling since mid-2018 in virtually all of the 20 large developed and emerging economies. In Australia, their factory PMI is still expanding, even at a slower rate. Expanding at a faster rate, however, is house prices. The August CoreLogic report shows them up 1% in a month, and the first rise in almost 2 years, with Sydney and Melbourne leading the way. But despite this recent upturn, overall prices are almost 6% lower in a year. The recent uptick in Aussie job ads hasn't been sustained, however, reverting to the decline in August, and they're now down 11% in a year. US Treasury 10-year yield is unchanged at 1.5% because Wall Street is closed. Gold is up to $1,529 an ounce, a rise of $9 since this time yesterday. And US oil prices are weaker again today, and now just on $54.50 a barrel. The Brent benchmark is also lower on $58.50 a barrel. And the Kiwi dollar is holding at its lower level of 63.1 US cents. On the cross rates, we're up to 94 Aussie cents. Against the euro, we're at 57.5 euro cents and marginally firmer. That puts the TWI just on 68.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.